Welcome to the Small Business Tax Savings Podcast, your weekly dose of accounting and tax tips specific to small business owners. You will be on your way to growing your business and paying the least amount in taxes as legally possible. Here's your host, Mike Jesowshek, CPA.
Hello and welcome back. Today's topic is, what is an S corporation? Now, before I get started, I just want to let you know that we did an entire series on S corporations on both our blog and podcast. So if you want to dig deeper from what we discussed today, check that out. Within the show notes of this week's episode, there will be a link that you can check out our full series. It's like a 6 or 7 part series on S corporations that we did last year, where we talked about various different steps that you might want to check out. We also have a very in-depth deep dive into S corporations as a module in our tax minimization program. If you are a member, you will want to go through that entire module. If you are not a member yet, now is a great time to join. We have not only all this content and different things about tax strategies, but we also do monthly group training sessions. We have a bookkeeping training program, and you also have unlimited access to our team for email questions for accounting and tax issues. So it's a great program where we call it kind of an accountant in your back pocket, where we're here to answer those questions you have along the journey. If you are not a member of our tax minimization program yet, go to www.taxsavingspodcast.com/tax. With that being said, I always like to do a refresh on S corporations every year. So that's what we're going to be talking about here. First question we want to tackle and talk through is, what is an S corporation? Now, an S corporation is simply a tax election. It is not a separate entity. Many people think that's confused, think that they need to open an S corporation, where it's not an entity that we open, it's simply a tax election that we elect to be taxed as an S corporation with a current entity. You need to have an LLC or a C corporation already set up, and then you simply elect for that entity to be taxed as an S corporation. As part of our tax minimization program, we go through the exact steps that you need to take to elect S Corp status. So you're able to do it all on your own. We talk about the forms you need to file, all within the program. So if you're looking to start that process on your own, check out our tax minimization program. Now, so we know an S corporation is a tax election. It's not an entity type. We have an entity type, and then we elect to be taxed as an S corporation. But why would someone want to be an S corporation in the first place? And that's a great question, and one that we want to kind of walk through here. The number one reason we see small businesses electing S Corp status is to save on self-employment taxes. The majority of businesses we see are set up as an LLC, and thus they're paying self-employment taxes on the profits of their business. They're just paying self-employment taxes on 100% of those profits. So let's go through a quick example to kind of illustrate or look at what this might look like. As a sole proprietorship or a single member LLC, you pay your normal income tax rate on the income of your business, as well as self-employment taxes. And self-employment tax is broken into 2 separate pieces. You have Social Security and Medicare. Social Security is 12.4% on your first $147,000 in 2022. And Medicare is 2.9% on your total business income. So the combined amount of Social Security or self-employment taxes is 15.3%. Again, self-employment taxes is 12.4% on your first $147,000, and then 2.9% on your total business income, for a combined total of 15.3%. So as a sole proprietorship or single member LLC, you pay your normal income tax rate, whatever that might be, plus self-employment taxes. So let's look at an example. Let's assume that you have business profit of $80,000. If your business profit at $80,000, you would have a little over $11,000 in self-employment taxes, and that would be, again, over and above your normal income tax rate. So you'd pay your normal income tax rate, whatever that is, plus self-employment taxes of $11,000, and that would be on profit of roughly $80,000. An S Corp is a strategy that we use to help potentially reduce the amount of self-employment taxes that you pay. And as part of our tax minimization program, we have something in there called a payroll tax savings calculator. And basically with that, you can use that to enter your specific data, your business profit, etc., to see what your savings would be. So if you're part of our program, check that out, run some scenarios to see kind of where the potential savings would be with an S corporation. Now let's talk about, how is an S corporation taxed? As an S corporation, there is no federal income tax at the corporate level. Instead, the profits from the S corp flow through to your personal return. This is very similar to a single member LLC. Profits are flowing through, you pay the taxes on your personal return. Now, with an S corporation, you will pay your normal income tax rate on the income from the S corporation, and you're going to pay self-employment taxes on the salary that you take from an S corporation. Now, you may be thinking, salary? What's the salary piece? Yes, with an S corporation, you must be a W-2 employee of the company. So you're a W-2 employee of your company, and you must pay yourself a reasonable salary. And that reasonable salary that you pay yourself will get hit with self-employment taxes. However, any profit from the business over and above your salary, you can take as a dividend and thus avoid self-employment taxes. And this is the beauty around the S corporation. So with the S corporation, we take your business profit, your income, and we basically split it into two pieces. A salary, which is a W-2 salary that gets hit with self-employment taxes, and then a dividend. This is just taking money from the business account, transferring it to your personal account, and you're avoiding self-employment taxes on that dividend piece. If we compare this to a sole proprietorship or a single member LLC, you can see that the advantage is that instead of paying self-employment taxes on 100% of your income, you only paid on the payroll portion, but any other earnings from the business are just taxed at your normal income tax rate, not self-employment as well. So what is the difference in taxes between a sole proprietorship or a single member LLC and an S corporation? Let's take what we discussed above and do a side-by-side example to show the tax differences between the two. Let's use the example of $80,000 in profit. In this example, if you were set up as a sole proprietorship or a disregarded entity such as a single member LLC, you would pay $11,000 in self-employment taxes. Again, this is in addition to your normal income tax rate. However, with an S corporation, we only pay self-employment taxes on payroll like we discussed. And in this example, let's assume that a reasonable salary for the work that you're doing is $36,000. So if we pay yourself a reasonable salary, W-2 salary of $36,000, now we're paying self-employment taxes of just under $6,000. So as you can see in this example, by electing S Corp status, you would see tax savings of over $5,000. And these would be savings that you would see each and every year simply by doing an S Corp election. Now you may be wondering, if I took a salary of only $36,000, remember we had profit of $80 and we took a reasonable salary of $36, what happened to the other $44,000? You would simply take that as a dividend, similar to an owner's draw, and it would not be subject to self-employment taxes. And this, again, is the beauty around the S corporation and where the tax savings really start to occur. Of course, these savings are self-employment tax savings. You would still owe your normal income tax rate in both scenarios. That does not change. You're still paying your normal income tax rate on the full $80,000. It's just how much are we paying in self-employment taxes. So as mentioned, as part of our tax minimization program, we have a payroll tax savings calculator that you can use to enter your specific data. What is your profit? What would be your reasonable salary? And it's going to spit out kind of what that self-employment tax savings would be in your scenario. Now, the next question that comes up is there any disadvantages to an S corporation? This sounds great. In this example, we made $80,000 in profit. By doing an S corp, we're saving, say, $5,000. Now, when we talk about disadvantages of the S corporation, yes, there are some, and most of these really come down to a little bit more compliance and complexity. So the first major disadvantage is that you have to file a separate business tax return. An S corporation requires its own separate tax return. If you are used to filing as a sole proprietorship, you know that it gets recorded on your personal tax return with a Schedule C. With an S corporation, you have a business tax return. That's Form 1120S. And then you're going to have a K-1 from that business tax return, which is used to report the profits from the S corporation onto your personal tax return. This separate business tax return is typically going to result in just some added tax prep fees. It's a little bit more complex, and there's going to be additional fees when it comes to filing your return. You will also need, with an S corporation, a full set of financials. This is income statement and balance sheet. Now, I don't typically look at this as a bad thing, as I think every business should have complete financials. That's an income statement and a balance sheet. But it is worth mentioning that if you elect S Corp status, you will need to formalize your bookkeeping a bit so that you can create financials. That's going to be a key thing. The second major disadvantage of an S corporation is that W-2 payroll is required. So as we discussed with an S corporation, you are required to pay yourself a reasonable salary, which is just regular W-2 payroll. And this means that you need to withhold taxes, file tax forms, submit W-2s, and all that fun stuff. So this required W-2 payroll is going to result in having to bring on a payroll service, which is going to be added fees. Now, there's a few other disadvantages, but the two mentioned above, separate business tax return and W-2 payroll required, are the most common that will affect every S corporation. Now, in our blog post and podcast episode next week, we're going to be digging into when it makes sense to elect S Corp status versus when it does not. So you're going to want to make sure to check out that episode to say, based on my scenario, this S Corp sounds all good, but when does it make sense to elect S Corp status versus when does it make sense not to or hold off on it? So let's go through a quick summary of S corporations. An S corporation is simply a tax election. It is not a separate entity. You first need to be an LLC or C corporation, and then you elect for that entity to be taxed as an S corporation. You still remain the same company, same name, same everything. It's just a tax election. The number one reason to elect S Corp status is to minimize self-employment taxes. As a sole proprietor or single member LLC, you get hit with self-employment taxes on 100% of your income. With an S corporation, you need to take a reasonable salary, W-2 payroll, which will get hit with self-employment taxes, but any income over and above your reasonable salary, you avoid self-employment taxes on it. So roughly stating, a business profiting $80,000 a year will save over $5,000 in taxes per year by electing to be taxed as an S corporation versus a single member LLC or disregarded entity. The two biggest downsides to an S corporation are that you'll need to file a separate business tax return and that you need to bring on a payroll company to handle W-2 payroll to yourself. So those downsides are going to bring in some added costs, which are going to eat into some of your tax savings. And that's why we look at what we're going to be talking about next week is when does it make sense to be an S corporation versus not? We're going to see, does your income make sense? Is your income high enough that the S corporation tax savings are going to far outweigh any kind of additional costs that you might have? As a reminder, we also did a full series on S corporations last year. And so within our show notes, there's a link to our blog post where you can find a link to that full series that we did where we talked through start to finish all about S corporations. So if you're wanting to learn more about S corporations, check that out. The goal of this was just kind of do a summary, do a refresher, understand when S corporations make sense. I also mentioned that we do a very thorough deep dive on S corporations in our tax minimization program. So if you're not a member of our tax minimization program, go to taxsavingspodcast.com/tax. As part of that, some of the documents that we have in there is we talk about the S corporation strategy. We have a payroll tax savings calculator. This is where you can run scenarios with your specific situation and see what savings you would have. We talk about the disadvantages of S corporations, how to decide if an S corporation is right for you. We run down the exact steps on how to elect S Corp status so you can do this whole process your own. We also walk through how to determine a reasonable salary. With an S corporation, we talk about how you need to have a reasonable salary. We have a full worksheet where you fill out and it'll help determine what that reasonable salary would be for you specifically. We also talk about how to set up payroll for an S corporation, how to use a software like Gusto to manage that whole payroll piece, make it super simple. And then we also talk about steps you need to take after electing S Corp status and so much more. So again, that is part of our tax minimization program, where we have all these kind of templates, documents, information that you can do this process on your own. So if you are not a member yet, go to taxsavingspodcast.com/tax and join. Again, next week we'll be talking about when an S corporation may make sense to you versus when it may not. So you're going to want to check that out too next week to ensure that you are making the right decision. Again, the whole idea of this S corporation is simply to help minimize the amount of self-employment taxes that we pay. Self-employment taxes is roughly 15%. So if we can help eliminate a portion of that self-employment taxes, bring on a few added costs and compliance issues with the tax return and the payroll, we could save a lot of money and have just a small cost to be able to do that. And that's exactly why we recommend S corporations for a lot of businesses. Again, next week we're going to be talking about when that S corporation, when it makes sense for you to elect S Corp status. A couple of housekeeping items before we go. We have a live webinar coming up May 4th. That's going to be our 2022 tax strategies to ensure business owners pay the least amount possible. It's a free live webinar that you can sign up for at taxsavingspodcast.com/webinar. We also have our Small Business Tax Savings Summit coming up June 14th and 15th. This is going to be a virtual 2-day, 12-hour event where you're going to walk away rejuvenated with ideas and implementation steps to lower your tax bill immediately. You can sign up for this at taxsavingspodcast.com/summit. And we have a $100 off coupon code, and the coupon for that is podcast taxes. Again, if you are a member of our tax minimization program, our summit is included with that as well. Don't forget to check out our show notes. We have a blog post on everything we talked about today, as well as a link to our series that we did on S corporations. And again, remember to tune in next week when we talk about when an S corporation may or may not make sense for you. Thanks again for listening to another episode, and I'll see you guys next week.
This has been another episode of the Small Business Tax Savings Podcast. If you enjoy our weekly episodes, please leave a review and share with other business owners. You can find previous episodes and more information at www.taxsavingspodcast.com. Thanks for listening and have a great day.